Welcome to Come On Home Real Estate. My name, Beatrice Caraballo, and my guest today is Vince Gutierrez from NFM Lending. Welcome.
Hey, thanks. I'm happy to be here.
I am so glad that you are joining me because this is like my phone buddy, okay? When we're stressing out, this is my phone buddy. Yeah, when I want to take a nap because I'm stressed out, yeah, this is my phone buddy. He gets me back on track. So I like working with Vince. Vince is like, I don't know, he's like my number one right there because since I started my career in real estate, he has taken all the tough, like really tough. Right?
Yeah.
Yeah, like really all the tough accounts that I've had, and we close them. We literally close them. So Vin, thank you.
Thanks for having me, and that's what makes a good partnership.
Right?
Because if you have the communications lines open, and you just strategize, how do we get past this? What do we do next?
Yeah.
And it's the most important thing, and you got to be able to talk.
Yes.
You know, we may be, you're a realtor, I'm a lender, but together we're a partnership.
Because we have to team up so that we can get the transaction to a closing.
Yep.
So we can't come up into a bump and not talk about it.
Exactly.
So I love every morning he calls me or I'll text him, hey, how you doing? And immediately we get on the phone and we go each account. We go by each account and we make sure that we have crossed all our T's.
Yes. Yeah.
Because some of our T's sometimes, como que they get sideways.
Just a little bit. Just
a little bit.
But that's what's important is the communication. I'd rather tell you in front rather than, hey, we're a week out and I still haven't received X, Y, and Z.
Because what is the danger of waiting to the last minute?
Well, essentially it puts everybody in a bind and it stresses everybody out. And if at least we know it's coming, we can think about ways to get ahead of stuff. And like a situation we're working on now, this person we've known for a couple of weeks and they've just been hesitant to hand us stuff. But if I'm pressuring, it helps if you can pressure them to stress how important it is to get us some stuff.
And the documents are so important from the beginning to send it to Vincent. When he gets on the phone with you and he sends you that online application, because that's your process, right? It's an online application, and he stresses from the beginning, hey, I need these documents. Don't wait until later, because later might be too late.
Yeah, the most important thing is the way I do it is I get those documents ahead of time. And if there's any questions, anything that may derail the loan, let's get it in front of an underwriter ahead of time. But if they look pretty solid, what I like to do is get those people, get their documents in, get everything set up so that when they go under contract, they can solely focus on negotiating and picking the houses. And once that contract comes in from you, we get the process started. I just ask them for updated pay stubs and bank statements. That's it.
Now, how many times do you run their credit? Because everybody's always concerned about that.
So we do a soft pull.
Okay.
So
at the beginning?
At the beginning.
Okay.
Because if their credit score is great or even average, that's fine. I don't need to do a hard pull. Let's just go through the process, make sure everything's good. But we only pull their credit once.
Okay.
So soft pull, but if they go under contract, then we have to do the hard pull.
Okay.
Because then we have to submit
Do
that
the
to underwriting. Yeah, make sure that everything's there.
Do you do another pull at the end when we're about to close?
No.
Okay.
So that credit pull is good for 120 days.
Okay.
So if they're still looking and we're coming close to that 120th day, then I'll repull the credit with their permission.
Okay. Because everyone's always concerned, is he gonna pull my credit again once we're under contract? Is he we're about to close, is he gonna do it again?
Yeah. Oh yeah, no, trust me, even in the beginning, you have to pull my credit. I'm like, I have to see your debt, I have to have an idea, I don't wanna waste your time, I don't wanna waste the realtor's time. Let's just get the answers up front. So we do the soft pull once, hard pull eventually throughout the process. And as long as we don't hit that 120th day we close, we're good.
Okay. See, the thing that I don't like is taking anyone out without a pre-approval, right? Yeah. Because just like you said, there's no reason why we should be wasting anybody's time. Not yours, not ours. It is best to get your pre-approval. A lot of banks will send you a pre-qualification. I prefer the pre-approval. What's the difference?
So one, we can, we look at it, the loan officers. We take a look at the documents, we look at it, and we submit it. But the one thing that we're now doing with our clients, like we did with one of them, is I had an underwriter take a look at it. So if the file's already been underwritten by the person who's actually approving it, we're good. We can get ahead of any landlines, anything that comes up.
And I like that when you told me let's do this with these clients of ours. I was like, hey, I like that.
Well, we all want to sleep at night.
Yeah, listen.
Take some stress out of everything.
I don't want to be coloring my hair all the time,
I'm starting. Got to get that Just for Men coming soon. Keep this thing red, not gray.
Yeah, because it was great because it showed us what we needed to tackle ahead of time before we even got into under contract or anything like that. So I love that you came up with that. I loved it.
Well, the other beauty of that is we call that process TBD, to be determined for we don't know what house it is, but we're just kind of using it as an example. And realistically, you can go to the seller's agent and just be like, their file's already been underwritten by an underwriter. We know what we need. All we literally need is just the appraisal, the title, and the homeowner's insurance, and we can close on this loan.
And so when they go to you, what do they need to do other than that online application?
So just two things. First with the application, they can do the online application, or I can walk them through it because some of our clients aren't tech savvy. So I'll walk them through. I'll just go through the questions, kind of help them out as we go. But document-wise, what do we need? So, driver's license, social security card, just pictures of that. And also what's important for some of our clientele is, the immigration status. So I need their, are they ITIN, or are they social security? Like, what do they have? But mainly documents is just bank statements, pay stubs, W-2s, and depending on what program we have, there might be other documents needed. Sorry.
My producer will kill me later.
That was pretty funny, actually.
So once they give you all the documents, and how long does it take for you to know if they qualify or not?
Probably like an hour or two. If they give me everything and there's no additional questions or anything that just seems off, then we can send that pre-approval out within an hour.
Okay. See, and I always say to my clients, he'll take about 24 to 48 hours. Don't kill me because he just said 1 and I say 24.
No.
You know why? I give him enough time that whatever he needs to do, if he has other questions that he has to call you again and ask you, he has the time. I don't want to be pressing him and then he gives me qualification or approval, and then when I put you under contract, the brakes come on.
That's the important thing. So, technically you're right, because we have other clients, other things. We may have a closing that's coming up that may take a little precedence, and that's the hard part about being a lender, is juggling versus current versus anything you had, So I do tell people, hey, give me some time, let's roll through, I'll get you a pre-approval out, and it is within 24 hours, because in that time frame you may have other things that pop up. Like you can schedule everything out, but you just never know when that red flag or something comes up, and then you get that phone call. So
we're usually almost at the closing, and I won't hear from him, and I'm like, okay, he's not saying anything, and it's that he's actually had to put something on hold, so now he has to put me on hold for just a minute and finish that off, and then come right back to me. So it's not that these lenders are just focused, just like I'm not just focused on one client. Don't get offended by that. We give everybody our 100% attention because we want you to be able to get to the house that you want to get to. But we need to make sure that all your documents are in place, that your bank statements, and I said it with an S, and I'll clarify that in a minute, that your bank statements, your credit score, everything has to line up, and that when we're under contract, we know that it's going to be smooth, it's going to fly right through, because we want you to get to your house. Now, bank statements. you know that we have just a few that hide those bank statements.
Yeah.
Is that okay? So if I have 2 or 3 bank accounts, should I tell you about all 2 or 3 bank accounts?
Absolutely. So you always want to be upfront and honest with your lender, because the worst thing that can happen is you're trying to hide something, but depending on the program you choose, we may need to see that account. Because if you're trying to hide, let's just say bank account number 3, but we see a transfer going into bank account number 2, the underwriter is going to question, hey, why is there a $5,000 deposit going in?
And why don't you know about this other one?
Yeah, so like with the state of New Jersey, their grant programs, they want to know everything.
Yeah.
Because they're giving you 10,
Yes.
17,000, whatever.
Yep.
They're giving you this money. They want to know and they want to see everything. You got to be upfront, especially if they're giving you that money. So you need to be honest with me. How much money do you have? You know?
And the underwriters, so the underwriters, I swear, I feel like they're our boss.
Just a little bit.
Because they seem to dictate where we're going and how we're going to get there and how fast we're going to get there. So he sends me the pre-approval. I immediately take you out. Listen, I just closed on one that I got the pre-approval and I took her out, and the very same day I took her out, she chose the house. And she said, this is it. I don't want to see nothing else. And I'm like, are you sure? And she said, yes. And I said, okay. And we put the offer in and it was accepted and we went under contract. I want to make sure that from that first day that you go under contract, you're not hiding things. Because if you're hiding something and you're trying to get that state grant like he's talking about, that may put a pause or a stop to what he's trying to accomplish for you. So always be very, very precise. Always be very upfront about things. I understand, that you're scared. Well, he's going to take all my money, because I've heard that. Well, he's going to take all my money for closing.
Yeah. Like, I didn't want to put all that money. It's not me taking it. It's what the numbers are.
Yeah. And it depends on the loan that you're getting.
Yeah. So one of the most important things is even tax returns. So for like the grant program, you need to have 3 years of tax returns done. Because on there they kind of look and see if you have any mortgage credits or anything that you've owned a home in the past. So they want to see 3 years. Plus the most important thing is, do you owe money to the government? So that's why we collect.
And all those numbers make a difference, so they have to be straight with you.
Yeah.
Now this grant, is it for everybody?
You have to qualify. So first-time home buyer. So what makes you a first-time home buyer? As long as you haven't owned a home in the past 3 years, you qualify for that part, right? And there's income limits and there's asset limits. Like you can't have more than 25% in your account of the house you're purchasing. Okay. That's one of the deals that we're working on. They asked me about that, and I was like, well, unfortunately, no, because you're putting 40% down already. So there's income limits depending on the program. You know, if you make too much money, it's not for you. Yeah. So there's little things like that. Credit score has to be a minimum of 620, and they just came out with something new. So originally you get $10,000. If you're a first-time home buyer and you qualify, you get $10,000 towards your down payment closing. Now they came up with the first generation buyer. So
which is awesome.
Yeah, it's going to help so many people. So basically, if your parents haven't owned a home or currently do not own a home, you get an additional $7,000 towards closing.
That is so great.
So like this in this area in South Jersey, it's $10,000, and if you qualify for the part, it's $17,000. Yeah. So there's a lot of other nuances with that, but if you're in North Jersey, it's $15,000 for the original grant. And then another $7,000 on top of that. That's $22,000. That's like our client.
That's a big help.
Well, for our client, they're buying a $300,000 house, and they're literally going to come to the closing table with like I think $100 at most. You know, roundabout.
See, you have to qualify for these grants. So you have to make sure. We had a client once. Oh well, he said I don't qualify. Well, you don't, because you have this, this, and this. Oh, but I'm gonna need help. Okay, there's other things that as a realtor I can help you with. For instance, we've come up with seller concessions before. So a seller concession is you ask the seller, to give a percentage to help you with the closing costs or the down payment or whatever it is. And that helps, but that's on my part. But again, this is a team effort, so I'm constantly asking him, do you think this would work? Do you think this might work? And he'll tell me, he'll let me know. You know, we have a client that we're working with, and she wanted to stay in the monthly rate of $1,300 a month. Well, she was approved for much more than that, but she can't afford much more than that monthly. Again, if he approves you for $300,000, that doesn't mean you're going to go out and I'm going to find you a $300,000 house. That's not what it means. You don't have to use the whole thing, right?
Yeah, correct. Yeah.
We can go and see a $200,000 house. That's fine. When you go to him, I always tell my clients, make sure that you're discussing with your lender how much that monthly rate that you can afford, and make it realistic. And talk to you about it.
And usually what we ask is, what are you comfortable with? Because there's a lot of other things that we don't take into consideration, right? We don't look at your Netflix subscription, your Hulu,
Yeah.
you know, daycare costs, you know, things like that, insurance.
The insurance, yeah.
Car insurance and things like
Yeah.
that. We don't take that into consideration, but that's something that you need to do.
Right.
And what I like to tell people is put it on a spreadsheet and just see what you're comfortable with. Yeah, I can approve you for $2,500. But do you really want to be at $2,500? You want to be like, for that client, she wanted to be at $1,300. That was her spot that she was comfortable with. And that's fine, because we don't ever want to put people in a bad situation.
Right. And when she came to me, she was approved at $275,000, and that was great. But then she privately said, I need to be at $1,300 a month. And I said, okay, so I have to go back to your lender. Don't get upset because I said, all right, we got to put a stop. Let's go back to your lender. To me, your lender is going to be your best friend, your compadre, okay?
Just a little bit.
Okay.
Yeah, you can't tell me everything.
Your amigo until you get to closing. So you're going to have to be open with him. You're going to have to be able to talk to him, not just to me. And I know, I'm friendly, I'm outgoing, all that stuff. But you need to be able to. Vince doesn't bite. I checked. He does not bite. I swear.
Certain times.
So make sure you tell him, I can only do 13, I can only do 12, whatever it is, and then he accommodates your loan. And then what he says to me is, listen, instead of that 275 like he did, he said, instead of that 275, let's give her 185, and that will accommodate that 1,300 that she wants to be in. And so I now have to change my focus and look for the properties that come within that 185, so that our client can be comfortable. Because we don't want to go into under contract closing and then they start missing payments.
Yeah, that's the important thing. You don't want to put, like I said, put anybody in a bad situation.
Right.
And just that, oh my God, this is more than I expected, and then you want to see that house on foreclosure. Like, nobody wants to see that, especially when we spend so much time with these people.
Right.
You want to make sure that they're in the best spot possible, because one of the
and
most
they can afford it, yeah.
One of the most important things is referrals. For all of us, we want to make sure that we do a great job, we get them to closing, and they're happy.
Absolutely.
And one of the things that you're kind of touching on with all this is all the work that we do in the background.
Yep.
That people don't notice, and that's the one thing that drives me nuts. Like, my realtor's not doing anything. I'm like, I spoke to your realtor every single day. We're trying to get you in a good spot here, and but we game plan like, well, she wants to lower her payment. Let's look in a different county. Let's get out of Camden County. Let's go to Gloucester County, maybe.
Right.
So,
and that's when I start trying to go through the MLS. Our MLS is our multiple listing service, where we list all the homes. Not homes that I'm selling. Everybody thinks, you're selling all those homes?
Yeah.
No.
You wish.
They're not mine. They're not mine. They're from other agents, but they're on our service. They're on our, what I call archive, because, it's a bunch of houses. And I go through there and I make sure that I find houses that accommodate the budget that he has given me for you. Everything is catered so that you don't get into any predicament that you can't handle. Because once you start living in your home, the last thing you want to receive, and which I've seen, is a foreclosure letter.
Yeah.
That's the worst. You know, I've had those cases, and they're very sad, and I don't want any of my clients, we don't want any of our clients going through that. So whatever he's asking you for, be patient. And trust me, the underwriter is gonna hassle him more than he's hassling you, okay?
Yeah. There's a lot of battling that happens.
That's what people don't see. So people just see, this is our lovely home. Do you like it? Look, four bedrooms. But they don't see the behind the scenes that we're doing every day.
If I'm asking you for certain paperwork and it just sounds ridiculous or dumb, there's always a reason behind it. And I've already tried arguing and trying against it, because we don't want to have to reach out to you for more, the client, for more paperwork. You know, everybody wants everything simple.
Yeah.
Even including us, you know. Just keep it simple, but you know, if we're asking for it, there's a reason, and there's a policy behind it. So
now, question, because you mentioned it, is it easy for someone with an I-10 to get a loan?
So there are programs out there for I-10s, but that's tough, right? Because they have nothing kind of tying them down here, so the banks kind of see them as a risk.
Yeah.
So what they ask for, you know, they want to see credit history. So with certain clientele, that's very tough, because they believe in all cash. Cash. So like,
and the money under the mattress.
yeah, that's the one question we always ask. My sister, when she was working with me, she would just crack up, because that was her number 2 question.
Yeah.
Where do you keep it, in the couch or the mattress?
Or is it tied behind the painting?
Yeah, or my dad's case buried in the ground in the
backyard.
See? But no, so I-10 is a little tougher. So you need a little bit more money, because they ask for 20%. If you have no credit, it could be 25 or 30, you know, depending on the program. But then you need something called reserves, which is something not a lot of people are familiar with. And that's basically like, for example, if your mortgage payment was $1,000 a month, they're looking for 6 months of that, or 12 months, depending on your credit and your risk.
Wow,
so basically they want to see that you have 12 months of payments in your account when you close. You don't use that for anything. It's just basically showing that you have enough in your account to make 12 months of payments. So that could be tough if you're buying a $200,000 house and you got to put 25%, you're at $50K right off the bat. You know?
And let's be for real, a lot of our clients do have that.
Yeah.
It's just they don't know that they can buy a house, that they do have it. Because a lot of them come and the first thing I hear is, I don't have a lot of money. And I'm thinking, oh, you have what?
So my line of questioning sometimes goes, all right, you know, how you doing and all that stuff. But then it goes, all right, do you have a social or do you have an I-10? I-10, next question is, how much money do you have in the account? How much money do you have at? Yeah, in la casa.
Yeah, because they always have money at home.
Yeah.
All the time. So let's talk about the credit scores.
Okay.
What exactly do you need of a credit score to even be considered for a loan?
So it depends on the type of loans. So with FHA, the lowest we can go is 580. So 580, you can go there. I mean, there's got to be other factors.
Yeah.
But you know,
that's the start.
That's the start. So you got to put a little bit more money down, you know, all that. But to go conventional, you probably want to be at like 680 or higher. So because you don't want to get hit with the rates and the mortgage insurance, it's all based off your credit score. So 680 or higher is kind of like that teetering point.
Okay.
If you want to go with the grant programs, they're at 620.
Okay.
So, and a lot of like non-QM, that's like the bank statement loans, that's investor loans, and like things that are outside of normal lending, those are usually around 680 or higher.
Are the bank statement loans really difficult to do?
No, it's essentially, it's a little bit more paperwork intensive, because from the clients we need 12 or 24 months of their statements.
Okay.
So we get those bank statements ahead of time. We send it to a scenario desk where they calculate their income. Basically take all the deposits. And wait, first most important thing, this is for business owners, not just your everyday person who has a W-2 job.
Right.
So we take, you know, because a lot of these business owners are cash. Let's take a pizza place, for example. A lot of it's cash.
Right.
So they put large deposits in there. And we take those deposits, divide it by 12 or 24, and that's how we come up with your true income.
Okay.
Because the most important thing is with these business owners, a lot of them may make $200,000, but they're claiming on their tax returns $20,000. So with $20,000, you can't do much. So then we got to get creative. How do we show that income that you're getting?
And we had, it was weird because the very first, I still remember the very first client that I had that situation.
Really?
Where they were, every year they were saying, yeah, we make $100,000, $100,000, 150, yeah, 150. And then the tax returns came in and the bank statements came in.
Yeah.
Those numbers weren't adding. It was no muy bueno, and we were already under contract. Yeah, that was not a happy camper, me or them.
That's why when situations like that come up, you got to have options. And the place I'm at right now at NFM, we have tons of options.
Yep.
You know, some people don't want to go bank statement. I had a client that they didn't really want to provide any of the background financials or anything of the business that we needed. And so we went with a 25% down program. So
Okay.
basically,
And you won't need the documents.
no. So as long as, so
okay.
basically, as long as your
Okay.
credit's good, you have 25% down, and you have 12 months of reserves. We don't look at your job history. We don't look at your income. We don't look at your tax returns.
Okay.
And we were able to close on that house. So it's a simpler loan. Yeah, rates might be a little higher because you're going outside the norm, but it's options. People need homes. They can always refi 6 months later,
Right.
8 months later.
And what I like about NFM is all the different programs that you have, all the different types of loans that you have, and you try to, you know, like the one that we have, that we're working right now, we started at FHA, we're now changing it to something else. That's why I like working with Vin, because I can constantly, that conversation that we have, he figures out, all right, this type of loan is not going to work. Let me try this other one. And so I like all the programs that NFM offers, and I really love the way you work with the clients. Even if we're like pulling our hair, coloring our hair every weekend.
That's why I chopped it off.
And we're like, sílveme la tequila, por favor. Because some of these accounts, they're very difficult, but they're worth it. They are so worth it.
So appreciative.
Oh my God, to get to that closing table and have them signing, and you guys are still nervous, and we're like ecstatic about it, like, yes, you guys got here, you know. Let me tell you, just to take that, yesterday, I'm telling you, we were at it, and we finally got to the closing, and she was nervous throughout the whole thing, and then she went to take the picture, and all her teeth came out. I was so happy with that.
Yeah, it's huge. I mean, they're appreciative, right?
Yeah.
I mean, this is their dream. They want to own their house.
Yeah.
You know, they're proud,
Yeah.
right? And when you're renting, this is my home, but it's not my home. But when it's their house, they're like, I can't wait to barbecue, come over.
Man.
We're going to have
It's a
some
different
cerveza, chorizo, like,
Oh man, it's a different feeling. I love it.
Yeah.
I love it. Now, so another question is, when I send you Spanish-speaking clients, can you attend to them?
Yeah. So I speak Spanish. So what?
See, he's my gringuito gringo.
Yeah. So everybody gets surprised when they see that, because what do I look, Italian?
Yeah.
Irish, I get all that stuff. But no, my parents are from Mexico, and they came here in the 70s, I think. So they've been here for a long time.
Wow.
Yeah, they're citizens. Like So we've been in this area. I grew up in South Jersey.
Oh,
so,
okay.
So
Okay.
everyone's always surprised. They're like, "What's your last name?
Yeah.
What's your real first name?"
I know. I send them the picture, and they're like, "He talks Spanish?
Yeah.
Is he American?" I said, No, he talks Spanish. And they're like, "Oh, okay." Because every time I send your referral, it has with the picture.
Yep.
And everybody's always asking me, does he talk Spanish? Can he understand me, or do you have to translate for me? I'm like, no. It's between you and him. You're okay.
Yeah. So basically, I grew up. My parents spoke Spanish to me, so like my ear is perfect. I understand it.
See?
And then I spoke English to them to help them learn English as well. So, we both are kind of like in the same spot. It's funny, right? Their English versus my Spanish.
Right.
But that's how we helped each other, and obviously the telenovelas were on nonstop when growing up. So
Everybody learns with the telenovelas.
yeah. Chava, what is it, Chava del Ocho?
Yeah, oh my God, that too.
Yeah.
So Vin, question. This is a good one because you know we're working on one right now. Is switching lenders bad?
So it usually is, but in certain scenarios, it's needed, right? So if you're working with a national lender, they may not know the local limits or local rules or anything like that. Especially, particularly when you work with a national lender, they don't know the listing agents. So that's listing agents, if they don't know who's on the other side doing that loan, might not get your offer accepted, even if it's better. But for example,
that has stopped me a few times.
yeah. I mean, your name and who you work for carries a lot of weight in this industry.
Oh man.
But even just rule-wise. So there's a pre-approval out there for 600,000 FHA. Now you're like, oh my God, I got an FHA approval. This is awesome. Like, this is great. But the reality is there's certain limits in different counties of how high you can lend on an FHA loan. The most you can do is 529. So if they're 3.5% down.
When I told him that and he explained that to me, I was like, dag, Vin, you just busted my happiness.
Better to do it now than when you're under contract for 650 or 600.
That's true. That is so true. So any last things that you need to tell us, that you need to tell the public to know?
So basically, a lot of people are hesitant to talk to lenders because they think they understand and they know everything right off the bat because of something their brother told them or their gardener or plumber or whoever.
That happened 8 years ago.
Yeah, they think they know, from their one experience, but everybody's experiences and scenarios are different. So the great thing is we do the soft pull. So people are so nervous about that. But the most important thing is I see your debt, I see your credit. You don't want to think you're at a certain spot and then say, I'm ready to go. It's February, it's March, I'm ready to go for the new season. And then come to find out there's a judgment, or come to find out their score is not where they thought it was, or they don't understand how to calculate their debt to income. So the most important thing is talking to us, getting a game plan together. What I do with our clients is I tell them, hey, this is what your monthly payment is, this is what your debt is. Right now you're at 70%. Do you really want 70% of your income to go to paying bills? And first of all, you're not going to get approved anyway. You got to be below a certain percentage, but we come up with a game plan, we strategize, and then even us as me and you and all the realtors I work with, here's the game plan, here's where they need to be, this is what they need to do. So you can follow up, I can follow up. But it gives people hope, and it gives them a possibility to understand, like, this is my path to home ownership and generational wealth.
Right.
A lot of the people we talk to, they want to leave something for their kids.
Right.
What's the best way to do that is land. You have your home is your savings account.
No, you ain't
You
kidding.
can pull from it. You can do HELOCs. You can do loans. You can do cash out refi. There's a lot of things you can do with property that you can't do because you're just renting.
Right.
So
Hey, listen, he talked to me about HELOCs, and I was like, now you tell me this? Really?
Yeah.
My pool needs help, and now you tell me this.
Hey, there's always options. And not even for home repairs, but if you want to invest, there's a lot of people who want to be investors. Take the equity and put it into another
That's
home.
right. That's right. So how can people get in contact with you?
So 2 ways. You can call me through my cell, or you can send me a text. My phone number is 856-371-9424. Or you can send me an email. My email address is vgutierrez, that's VGUTIERREZ, at NFMLending.com. Or you can get into hold of Beatrice, and she'll put you in contact with me. And last thing is our website. So I don't know that off the top of my head. It's a certain link, but NFMLending.com, I guess. But we'll send you the link. You'll get to the website. You'll get to see my smiling mug right there. But that's the best way to reach out.
So now you know. Vince Gutierrez from NFM Lending, and I am Beatrice Caraballo from Keller Williams. Come on Home Real Estate, 856-676-4046. Love you guys.
Thanks.